Hello everybody and welcome to part 2 of imbalance. So in today's video we're going to be going over how to use imbalances. So let's begin. Now, how to use imbalance. First of all, we can use imbalances to understand where price will eventually go to, right? Because we know imbalances always have to be filled out. So by understanding where an imbalance is, we can use that as an indication to where price will be, wanting to go next. Now, this can then eventually be used as extra confluence, right? Because let's say we've got an order block and below it, so let's say we have a sell order block, right? And below it we've got an imbalance, right? So what we can do is we can use this imbalance to understand that price is going to come to our imbalance, fill it out, tap into our OB, then it's going to show us reaction, right? And another way we can use it is TPs and take partials, right? So we can use imbalances as take profits and also take partials, right? Which will be, more in depth in the risk control section, right? And we can use imbalances for possible entries. However, I do not recommend this because your entries are not as refined, right? So let's just begin with imbalances. So you can remember we went through these examples on our previous video, right? On what imbalances are. But if I just go to any example where there is an imbalance, right? So for example, here, right? So actually we'll use this example, right? So we've got an order block right here, right? Very nice order block right here. However, below it, directly below it, what do we have, right? We've got a really nice imbalance. Now I'm not sure. Okay, so this order block did get triggered, so this is a really great example, right? So what we can do here is we can mark out our imbalance zone, right? So let me just replay price so this feels more educational. So we can mark out our zone there, right? Remember what we've done, right? Remember how we marked out this imbalance zone. So we're on this time frame, right? And it is looking the most clean, right? Because we can see, actually, you know what? Let's go on the 2 hour time frame. It might look a bit more clean there. So thing is, I don't want it to be touching into my order block, right? Because then we can easily just, see something really volatile, right? So on the 1 hour time frame, let's see how it looks like. Okay, so if I draw it to the third wick, it's been filled out a little bit, right? So what we can see is it hasn't been filled to the 0.5 yet, right? So we can mark out our Fibonacci the other way around, in fact, right? And if I just extend this to the right, so what can we see? We've filled in the 1, but we haven't filled in the 0.5. So this is still useful to put in because we know price wants to come back and fill out the rest of this imbalance. Then, of course, tap into our order block. Right? So what can we see here? We've got an order block. Right below it, we've got imbalance. Right? So what do we know from here? We know 100% price is way more likely to come back up and fill in this order block and this imbalance. Why? Because we've got two things that it wants to fill here. First of all, we know there are loads of negative positions over here from the order block. However, we also know that there's orders that need to be filled within this imbalance zone, right? So now we've got that double confluence, right? And we know also we've filled out the 1. Now we're looking for that filling out of the 0.5 and the 0, right? And then eventually tapping into our order block. So general direction for price is to come in here. So what we've done there is we've created understanding where price will go and extra confluence, right? So if we just play price, as we saw before, this plays out perfectly in our direction, perfectly. So bang, right there, what do we see, right? We see price comes in to fill out our imbalance, right? It fills out, don't know what's going on here. Let me just switch real quick. Okay, so bang, we filled out our 0.5, right? That's brilliant. That's exactly what we like to see. Right, we'll fill out 0.5. Now we'll fill out the 0. So now what do we expect? We expect the price to tap into our order block right after. Right, we've tapped in, and there we go. That's our refined entry, right? Extra confluence refined entry, right? Put the stops there. Of course, this order block isn't great because it is 30 pips. And then we can, go for our targets. However, we can also do something really great with this order block, right? So let's just say our overall targets are here. Instantly, we've got a really nice take partial. Why? Because we've got this lovely imbalance zone that we can use, right? And now with this, for your take partials, right, you can go for the 1 if you're feeling you want to go safe, or you could go with the 0.5, right? and those are two great take partials where you can, you know, secure some profit straight away, right? And you know, right? So that's great. What we saw there is that we saw possible reaction, right? So if we were a trader right now and we saw something like this on the low as we were holding this trade, right? So let's say we went all the way down to the 15-minute, right? And we were watching price slowly by slowly, right? And we saw some heavy reaction following an imbalance, right? That could emotionally really mess us up, right? Because if we saw that and we were holding this trade, we might think, oh, I might need to pull out of this trade. You know, price is going to come back up and possibly stop me out. But because we set that take partial at the 0.5, right, when we entered this order block, we now know half of our position or a quarter of our position has been taken out, knowing that in case we do see some reaction, we've put our stop loss to break even and we've taken out some of our profits, right? And more on this on the risk control section of the course, right? So make sure you check that out as well. But yeah, that's exactly how you use imbalances for take profits, understanding the general direction of the market, and extra confluence. Now let's move on to possible entries. Now the thing is with possible entries is that like I said in the previous previously in this video, is that they are not refined, right? So the problem is that there aren't always great take profits, and they're not always great stop losses, right? So if I just show this as an example, although this one did play out quite well, so it is contradicting what I'm saying. However, I'd say this is a very lucky opportunity, right? So we've got that perfectly on that contesting order block, right? This is a great example of where it does play out. However, still 1 to 3. However, if I was to show you, for example, on this one where we did have it, however, I wouldn't say you'd want to enter from this one. So let me show you guys an example where imbalances don't always play out. So with this example play out, I mean, if you took an entry from the 1, maybe. However, if we took an entry from the 0.5, we know for a fact it's not going to go in. Are there any other examples which I'd say? I know there's a good one on CAD JPY, so let me show you that. Right, so if I go to the 4 hour, okay, CAD JPY. So we've got an imbalance right here, right? We've got this imbalance zone right here. Now, if you were to take an entry from here, from the 1, you would be in profit for quite some time. However, if you were targeting this contesting order block, you eventually would have been stopped out, right? So, like I say, refined entries are not there with imbalances. However, you can get some entries. I don't recommend it. I don't usually do it. However, like I said, you can get them. So yeah, that's all there is about imbalance. Hope you guys found this one educational, and I'll see you guys in the next section.